Are you a small business owner running an LLC? Then you've probably felt the sting of self employment tax, and you're probably paying it on 100% of your business profits. And unless you've been hiding under a rock, you've also probably heard that there's a quote unquote easy way to reduce this tax bill. Just elect to be taxed as an S Corp. But like most of the quick fix business advice that gets passed around, especially on the internet and social media, the reality is often more complicated than just checking the box. An S Corp might reduce your tax bill, but it will definitely complicate your business structure. My name is Maritza Shay Nelson, and I'm a small business and nonprofit attorney. I help entrepreneurs, founders, dreamers, and innovators pursue their passion without worrying that all the legal stuff, like the rules governing S Corp and whether or not you're compliant, might come back to bite them. When you're a regular W 2 employee, taxes come out of your check automatically. Some of those taxes are the payroll taxes that cover Social Security and Medicare. And when you're a W 2 employee, you pay for about half of that, and your employer pays for about half of it. By default, when you start an LLC and you work for yourself like I do, well, now you're not an employee, you're an owner of the company. Taxes aren't automatically coming out for you anymore. Instead, you pay yourself through distributions or owner's draws, and these are subject to the self employment tax. Now, to be clear, self employment taxes are not an extra tax, okay? You're not paying more just because you're a business owner. They're the same Social Security and Medicare taxes or the payroll taxes that were being paid when you were a W 2 employee. And currently, at least at the time of recording, this is 15.3% of your earnings. The difference now is that instead of having an employer pay half of that 15.3%, you, Mr. or Mrs. Self Employed Person, get to pay the entire 15.3%. You don't have an employer footing part of that bill for you. So, this is where the S Corp election can potentially change things. It changes your legal relationship with your business. Now, the IRS will let you be a W 2 employee of the exact same company. You'll still pay the payroll taxes, but only on your salary, which probably doesn't include 100% of the profits of the company. And half of those payroll taxes will be paid by you just like before, but the other half will be paid by your company as a business expense. So now you're not paying 15.3% on 100% of the profits, but only a portion of those that are designated as your salary. And your employer is paying a part of that. So your company is paying part of that as payroll taxes. But now it's a business expense that also makes your profits a little bit less. So this potentially, if the math works out, can in fact save you some money on taxes. But is that going to work for you? And here's the trick. None of us can answer that for you. That's a question that needs to be settled between you and your accountant. Nobody on the internet knows exactly what your tax situation is, what tax bracket you're in, how much money your company makes, how much you would have to pay yourself as a salary. We'll talk about that in a moment. How much will be left over for potential distributions, and what this will actually look like on your tax return. That's why you need to have an accountant once you get past just having a basic W 2. Every accountant I've ever talked to has said there's a window where they really like this. At some point, you're not making enough money for it to make a difference, and you're just going to end up paying your accountant more money to do your more complicated taxes. And at some point, because the IRS hates all of us, you're making so much money that frankly, it's not going to make a difference anyway. You're still going to owe a lot in taxes. My clients range from startups to growing businesses and nonprofits with nearly 100 employees across a wide variety of industries. If you love what you do and you want to build something amazing without running afoul of the IRS, then let's talk. Check out the link in the description to schedule a consultation, or if you're not quite ready yet, download our 10-pillar post-formation legal checklist to help you spot this and other issues that could be causing problems in your business.